Hello, Parito Singh. How are you, brother? So it's Saturday, and I was doing some back testing, so I thought okay, I should do it live. 2019. I'm good. I'm good. So let's just check the last 5 years on the weekly time frame. Okay, this is going to be a back testing session. Okay. Hello, Eric. How are you, brother? Long time, bro. Mr. Seven, how are you, bro? Eric, I'm good. I'm good, bro. I'm really good. Okay, so I'm going to just go through the last 5 years on a weekly time frame and between the two characteristics of the market. The one would be the trending market, and the other one is the ranging market, right? So on a weekly time frame, if I'm looking at the weekly candle, everything within the 7 days, like an hourly time frame, is contained within this single candle. Okay, because this is a higher time frame candle, so we are looking at the high, open, low, and close of each candle. Okay, starting from 2018. So this is the thing I've noticed. Okay, the market changes. It's like the way of the how the market works, or the how the market moves, it changes throughout time. So if you're familiar with the last 5 years, if you've been trading in the last 5 years, the way the market is moving right now is completely different to how it was in 2016 and 15 was a big problem. Wizard, it was my birthday, then I mysteriously won a platform challenge. Oh, really? That's nice. Happy birthday, bro. I'm really good. I'm good. So, okay, you see this market, right? So from 18th December, 24th Monday, like this is the first week. This is the first week, right? You opened, we closed above the previous high. I'm gonna go through one by one, right? This is what I'm doing personally. I was doing the back testing for like 2 or 3 hours before I came live, right? So this is what you have to look for. Basically, you see this weekly high, we closed above the high. Okay, from this point to that point, you see the wick from this point to this point. This is a counter trend move. This counter trend move can come between, there is no fixed thing between the middle of the candle, upper 75% of the candle, or even it can wick below the body of the previous candle, but it will not close. So just keep this criteria in mind, and we'll move forward. And if we see some sort of basically anomalies, I'll try to explain it, right? So from 18 December 2020, Monday 24/18, we closed above. This was the counter trend move till the 50% of the previous body. Okay, we got another counter trend move. We closed above the previous candle high. So this was a confirmation on a weekly. So if I'm talking about the weekly time frame, a weekly close is more significant than the daily, the 4 hours and everything else. If the weekly is giving me a closing above, so it's very significant. So got the next Monday, the first week of 19, the second week from this period, 14th, you see this candle, we got the closing above. So if you mark a point to the high of this candle, you'll see how the price is reacting to these two. It's wicking below, but on a smaller time frame, if you go into the smaller time frame, I'm not going to go into the smaller time frame now because it's going to turn on all the drawings, and uh, it's going to mess up the chart. So if we plot a line, horizontal line here, you'll see how the price is reacting from this point. We closed above again. The next week, after this week, we came back to retest these 2 points. Okay, so overall we were here in this specific range for the 4 weeks. Okay, but overall, was the narrative changed on a weekly time frame? No, the weekly time frame was still intact. Okay, so this was the candle, we got the strong closing above. Okay, closing above. So this is the counter trend move on a weekly move up. So this is the point. Okay, this is an exception, obviously, because nothing is perfect every time. So you see how this whole trend was intact for how long. It was intact for about 119 days. So this was the first strong closing we got, okay, in April. From January till April, the weekly time frame was intact towards the upside. Okay, this was the first strong closing we got, and then we moved how many points? Let's measure it from the closing. Okay, if we measure it from the closing or the counter trend move, okay, for the next basically a whole month, we moved down, down and down until we got another closing above. Okay, so if you use the same thing on a 1 minute time frame, you will get a 5 6 points every time, even if it's a fake out. But on a weekly time frame, that 5 points would equate to somewhere around 400 and 500 points. So on a weekly time frame, it holds more significance. So till May 2019, okay, the whole month, this was basically the first week, the second week, the third week. If you look at it from the higher time frame, even from the higher time frame, monthly, basically this is a weekly chart. If you look at it from the monthly, you'll see a red candle. So the next month started, closed above, closed above, closed above, closed above, closed above. From this point, if you look at it from this point, we got a closing above, then a directly closing below this point. So initially, from 1 July till 29 July. So if you look at from the seasonality perspective or the seasonality point of view, usually the July and June are the months which have the lowest volatility. Okay, so as it's starting the summer, okay, it did, first of all, it did this. It was okay at this point, right? If you look at it from this point, still intact. The next candle, still intact. The next candle, what did it, what is it, it's telling me at the first place? Like, it closed above, the next week it immediately closed below. Even if it's a fake out, it's still going to give me like 500, somewhere around 500 points. But on a smaller time frame, I can think, like in the back of my head, I'm thinking about, okay, it can turn itself into a range, okay, just because of this. just because of these three. We closed above, then immediately we closed below. Okay. So what happened next? We were in this range for how long? For about 90 days, right? The same, we closed above, the same thing happened again and again. Closed above, immediately closed below. Will I trust another closing above? No, until we move above this point. Okay, so this is the same theme. We closed above, wick, we closed below, so I'm not gonna even trust the closing now. Okay, I'm waiting for something other than the closing because of this 15th July. The moment we immediately closed below this point, this action happened for the next 90 days, because on a weekly time frame, if we are looking at it from the weekly time frame, 90 days is basically nothing. Okay, so because of this, I would have assumed that for the next, basically next higher time frame candle close, till the higher time frame candle close, we are going to be stuck. So if that makes sense, from this point, it gave me an indication that it's going to be a range for the next amount of time, which I didn't knew at this point. Okay, so what is going to be the criteria which is going to filter out the range out of the trend? I'm going to mark this the high. I'm going to mark the high. I'm going to wait for the price to move above this high overall to break the higher time frame structure, until and unless we are below and within this specific range, I'm not interested basically in taking trend trades. Okay, we immediately closed above, closed below, closed above. See this point, it started another mode of trading, the trending mode. Okay, I could have basically, if I was not, if I were to not trust this, right? For example, if this closed, if this above, so I'm not using this criteria as for now. So when will be the next best time for me to trust this? Okay, because I have to at some point, whether I'm going to wait for the market to move above 8,000 or the high of the range, or I can take a short from this point, while risking or betting on that the range will break, and overall it can be a bull flag. If you see from this point to this point, if you draw line from this point to this point, it creates a bull flag. So from 19th July, August, September, 90 days of what? 90 days of summers and the ranging condition. In October, okay, you see after this, you see, okay, take a pay attention to the dates. 30th September, the monthly candle closed, the new candle opened, the way of its delivery was completely changed. Okay, so closed above the high, never got a closing, but this was still intact. For it to get invalidated, I would have needed this price to close below this low for me to be interested in taking a short, day trade short or swing trading short. Okay, closed above, closed above, closed above. For the next some amount of time, we moved up and up till the start of, what can you see, even every candle you see. Okay, so we have covered basically on a weekly time frame, we have covered 52 weeks, so that's a whole year. That's a whole year, right? Closed above, the same criteria. Okay, you remember what I mentioned, it can come 50% of this body or at the low of this body, but it will not try to close it. Okay, so this point, We were in this specific range for about 21 days. Okay. Keep track of time. To keep track of higher time frame closing, the mode of delivery changes after a certain period of time. If your strategy or if any of your strategy is not working, you can think of it, yeah, if it's not working, I should wait for some amount of time. Like basically you can think of it like, yeah, I couldn't wait for a weekly close. Okay, depends on what the time frame you're operating on, right? You move up a higher time frame and wait for that time frame to close and not force trades while the market is not respecting your strategy which you are using. Okay, at that specific period of time when your strategy is not working, you can wait for some time. Okay, because the most amount of drawdown will happen at those periods in which you're forcing trades which are not working because your strategy is not working. The mode of the market is changed for that amount of time. Okay, so basically for the next 3 or 4 months we moved up and up and up. Okay, so we closed above. Okay, see this point, you can say that this is closing below, but no, at once we were here. First, this was the validation criteria, and what was the invalidation criteria? The invalidation criteria was the low of the weekly candle. The things I'm talking about, it's robust on a weekly time frame. It's not as robust on a 5 minutes, 1 minute. It can fake out a lot. So priority should be given to the weekly time frame for the higher time frame trend. Okay, entry is completely different game, but you should be aligned with the trend, right, in the high time frame. So the first criteria was the validation criteria at of this candle, because if you follow the logic from the very beginning, the start of the trend from September, we closed above the high, we never got a closing below the low. The next candle of 19th October 19, Monday 14, right? We closed above the high, we closed above the high, they closed above the high. So this goes on and on and on. So even when it was like, you can say the liquidity run, whatever you say, stop loss run, it will try not to close. You see, this week, it took out these 2 weeks low. So if you're thinking in a higher time frame extremes, you should think about the people who are waiting for the price to run in a higher time frame towards the upside. Okay, so what it did, it the people who are waiting for how long, you can say, okay, from, let's say for example, somebody who bought it right around this point. Okay, he waited for about 14 days. Okay, the market is keeping in account of the last 14-15 days. The price will come below that point. Okay, never give a closing. Okay, so the counter trend move to the upside. So this happened again. You see this point and this point. This is the invalidation criteria, because we are working within this range. If you look at it from this point, when we were here, I was specifically looking at the price to, for the invalidation criteria, it should close below 8969.5 as we were here, right? This was the validation criteria, the high, and after this candle closed, this was the invalidation criteria, and this was another validation criteria. Okay, did we get invalidated? No. Yes, we got closing below this low, but we are working within this specific range. We never got a closing below the strong closing. See how it's different from this. These two candles are different from this candle. So any of these candles, how many candles do you see have a strong closing below? None. You see this, one or two candles of the low, one or two candles. Okay, And this is where it gets really interesting, right? So on this was the high validation criteria, and this was the invalidation criteria. Okay, so this was the crash of February 2020. Okay, the first bar will be known as the surprise bar. Okay, so one thing which is which in which the probability becomes 50-50, right? 50-50. What the thing is, how can one utilize the surprise bar? Basically the thing is, and you can utilize this, but it's more risky than to not do this. Basically, if this is my invalidation criteria, like for example, if this was my invalidation criteria and I have marked some sort of a horizontal line at this point, and once the price goes below this point, so generally I'm not interested in the trend at this point, because we might, because for example, if we move below this point at Wednesday, so I might be thinking, yeah, we might not give a closing below the weekly previous week's low, right? So what I can do in a counter trend situation, that I can basically go short, but it would be really risky. So basically that would negate the whole point of the closing above when waiting for the close. Okay, so on February, right? This was a surprise bar. So nobody could have expected or anticipated the crash. Okay, so this was the first validation. What happened after this validation? We never got a closing above until March. Okay, so do you see a pattern, or do you see a recurring theme? So what, it's very true that it takes money from the inpatient and gives it to the patient people, the market, right? So if, as we are operating on a weekly time frame, see this, the whole crash March, this was the first closing we got above. This was the first closing we got above, and look what happened. So when the price starts moving below the range, we should be looking for bullish setup or wait for the end of the week. Uh, it's just the information. Basically, you can do whatever with this information you can, but generally speaking, this should not be. This should be a general bias for your whole trend. Okay, this should be a general bias for the closing for the week is better and more probable, because one can do a lot of mistakes if you are looking for, basically, if I am looking at this point, right? If I'm looking for example, if I've marked this point, the high of this candle, okay, how would I operate on this personally? If I were to use this specific strategy, I use multiple different strategies. So this is an aspect of it, right? If I were to use, I'm gonna mark 78.24. Okay, I'm gonna mark 78.24. This is a one way to use it, right? So assume this point is marked as with the horizontal line. As the price is moving below this point, I am not interested. Okay, it can go to the hell, it can go hell to hell, I don't care. So this point is marked. Okay, keep an eye on 78.23.8. Okay, we moved about, the moment we are below 72, okay, I'm not interested. For example, if we start to reverse back and come above 78, then I have my invalidation criteria. What would be the invalidation criteria? We are above 782 and we are basically V. You see we came back and we are coming back again. We are regaining that specific territory. So as we are going down from this point, I'm not interested. We are coming back up to this point, then I can assume that we are going to continue the weekly trend. But if you keep doing this, it can mess you up. So careful. Okay, you have to be careful. Nothing works all the time, but this is a really robust thing. Okay, just having this information is really useful, because even if we had the flash crash, we had the flash crash on what, the coronavirus or COVID, right? See, in March we recovered. This was the first closing we have got. So if you can think of it like this, that this is, since this is a weekly time frame, if I am getting a closing above something, I can assume of getting about 300 400 points, generally speaking, but I would be not wrong about the direction completely. So see this point, we already wicked to this point. The next week we got a closing, we opened from this point. This was a gap. We never got a closing, direct closing below 69.42. Keeping track of this, you see this point, we have already wicked below, so this was a strong closing. This, from this point to this point, was a strong closing. So the flash crash happened basically what, 1 week, 2 week, 3 weeks. Within 3 weeks, everything was done. The price. So from this point, this is very interesting. This back tested this on a smaller time frame. This is very interesting. Okay, you see how the price is reacting when it's at the higher time frame extreme. We wick to this point. Okay, moved एकदम से, like immediately moved above, then moved down, then moved down, so 3 steps down, then we wicked above. So from this point to this point, so which you can think of it, because it's a smaller time frame, because it's a higher time frame, so you cannot properly see, but we were, oh god, no, I don't want my drawings to come back. Okay, whatever. So this is a complete range. Now look at it from the ranging point of view. How many days we were here for range? Okay, we were here how many days? Visit 28 days. Okay, so the market is keeping track of time. Okay, it's going to change. It's basically whatever it's the mode of trading it's moving on, whatever the path of it's using, right? It's going to change certain thing after a week or a month. So if something is not working, you can think of it here, when to apply your strategy, when not to apply your strategy. This is an important part. Majority of the system you use will work, but it will also give you a drawdown. So if you know when not to trade, right? So these are the periods which you can go into that direction of. I'm just giving you some inspiration to look into, right? Okay, so what sort of strategies will be used in these points? Either I'm looking to go short, because generally speaking, right, if I'm just specifically using this strategy, we never got a closing above, never got a closing above, we never got a closing above until 6th April. The first week of April, we got a closing above. So, and one more thing, if you look at it from in the smaller time frame, you will see large ranges, very large ranges. So you may think that this is a small range, but this is a large ass range. It's about 1700 points. Okay, 1700 points. So as the volatility goes up, as the market goes down, the volatility will spike. So what do I mean by volatility spike? The VIX will be at a very high point, and the 1 minutes, even the 1 minute ATR will also spike relative to its the trending market. So if you, I'm not gonna do it now because I'm doing this. If you compare VIX volatility index with the US 100, you'll see a negative correlation, completely negative, like inverse correlation, very precise inverse correlation. If you compare it, for example, if the Nasdaq is going up, the VIX will be going down. Okay, and if the VIX is going down, usually it's a trending market. Does it make sense? So what amount of things you can think about it just by this data point? Just me wait a minute, I'm gonna charge my phone. Okay, so if you plot volatility index along with your US 100, or you can also plot S&P 500, if you plot them, you'll see once the market will start to move up. So this is key element, this is really key element. Okay, so how the market moves up, this is very basic, but it's important to know. Okay, in the trending market, the 1 minute, in the trending market, the 1 minute, the 15 minutes, the 5 minutes, all of these ATRs will be low. Generally speaking, it's going to be low, and slowly we are going to trend higher and higher and higher. Okay, we're going to trend higher. So the volatility index, the VIX index, you'll see VIX index will be around 16, 17, 20. What we are working with in these conditions, the volatility index is slightly above 20 because this is election period and we are moving up. So this is what we are experiencing right now is different from the last 20 years, the last 40 years. Okay, this is new. So keep this in mind that this was a downtrend. As if this was a downtrend, we were having large ranges, 1700 points in about 35 days. Generally speaking, not only 1700 points, if you double 1700 points, how many, basically 4000 points, 4000 or 3500 points. How first we came down, then we came up within 35 days. So overall range would be 1684, so 1700 points on average. 1700 points, right? We not only came down 1700 points, we also came back up 1700 points. So volatility index was really high. Volatility index was high and we were having large ranges. So as we were having a large ranges, we wicked to this point 6938. Never got a strong closing below. Just keep this in mind and pay close attention to this period. We already wicked to this point. Never got a, like, this is not a strong closing, right? On a weekly time frame, a point 10 point is nothing. So it's not that precise, but it is precise. So for confirmation, you need strong closing. Strong closing relative to weekly would be around 100 points or 100 points, 100, 200 points, right? This is where we closed on a week. The next week opened with a gap. We moved down. We never got a closing below. The next week we opened with a gap. Okay, this is not a QQQ's gap. Guys, is the stream working smooth? Or is it laggy? Okay, so on the electronic trading hours, we got a gap. Okay, it's rare to get in a gap on the electronic trading hours. Okay, it's rare. We don't usually get a gap on the electronic trading hours. On the regular trading hours, the gap is normal. So we gapped, and keep this in mind, we closed on Friday. So this was a weekend gap. Okay, you can plot the closing and envisage you're already using the if you're using the NVOG or the weekly close. Eric, about 10 months ago, I explained this, basically the weekly closing or a lot of things about the closing prices. I think you were here at this at that period. Okay. So you see this point, March 20th, 23. So we gapped below, never got a closing. So this is really important. Only in the downtrend, so we only had a downtrend for about how many weeks? How many weeks? What was it? Like 21 days? Because not even 21, 14 days. The market already reached to the point where it wanted to go within the 14 days, and then it chopped around that period, the one took the low, took the low, but overall this was the time where we got the strong closing above. Yes, I've used the weekly close because I study CRT because they rely on closes. Yes, you can use this information for a lot of stuff, right? It does not mean you have to execute on this trade, but knowing this, because you can build a lot of things as you have these things as your basis, as your philosophy of trading, because this is something really fundamental. Okay, so what I am basically doing here, I'm prioritizing closes above the close. I'm prioritizing the higher time frame close. If you look at it from the point of view of the daily time frame, right, you won't get this much precision as you get on the weekly time frame. Okay, so specifically speaking, why the daily time frame does not work, because a lot of people use the time frame. So on a daily time frame, you will not see this symmetry. A lot of closing below, a lot of closing above. I'll go through the weekly time frame also. Okay, just we got a closing above. Okay, one more thing. Where do you think the fair value gaps come from? It comes from the closes, right? If we never get a closing above, we'll never have a fair value gap, right? We got a closing above, so this was the validation criteria. So you can also, those people who are entering or you understand ICT, just keep to the ICT, but understand what, if you remove the word fair value gap, right? What is it? How is it made? Like what is the mechanics of it, how is it made, right? So this was the validation criteria. We got a closing above this point, so this was the week, right? So the validation criteria, this is the next validation criteria. And what is the invalidation criteria? The low of this. Okay, so we are not going there until unless if we go to that point, then it's a downtrend. We are going to continue the downtrend. But as for now, the validation criteria, we came back to this point and moved up. So this, what was this indicating? That we are going to move further up, right? So from this point and this point, people draw a fair value gap, but the use of the fair value gap is completely uh, is not the right way to use that. Basically, a lot of people, right? If I draw a fair value gap at this point and I'm waiting for the price to come back to this point at some point in future, it's not a good way to use that tool. It can, you can use that, but generally speaking, if you're taking this validation criteria and you have a validation criteria, okay, we got a closing above, we got a counter trend. Okay, if we come back to this point, what will it do? It might react to this point. So what the people will say, the lower of the fair value gap, but it's only relevant now. It can be used at some point in future, but as we are talking in terms of, as we are talking in terms of weekly, so we are going to wait 1 3 months, 2 or 3 months for to come back to this point. What if it doesn't? So no, no, don't use that in that way. A fair value gap indication of a strength in that direction. If you before the fair value gap we get a closing, that is an indication of strength. Okay, the fair value gap can be used at, but it is more lagging than the close. The first, the market, because we do not have a fair value gap yet, but we do have a closing yet. Do you understand? We do have a closing yet, but do not have a fair value gap yet. So it's lagging in terms of the close relative to the close. So we got a close and the next close. Okay, and if you are looking at the validation criteria, this was the validation criteria. We got a validation. What would be the invalidation criteria? 8078. Okay. So look how we moved up and up. You may think, yeah, oh, it's moving up, it's not that much. I'm talking in terms of weekly time frame, yaar. I'm talking in terms of weekly time frame. Look, 1800 points, 42 days. Okay, but who has that amount of patience? Hmm? Yes. Oh, it's lagging because there are three candles to form, but yes, exactly. So, do you have to rely on a fair plus? You, that fair value gap is relevant when the price comes back to that point in some point in future, but the closes is now. Okay, do you understand what I'm talking about? The closes is like now. Oh, wait a minute. Okay, so this was the first closing, never got a closing below. Okay, at this point This was the validation criteria. We wicked above. Okay, the next candle, this was the invalidation criteria, validation criteria. We never went any for the next 3 weeks until this point. We got a closing. We came back to the 50%. Oh, King, I think the stream is lagging. Or oh, cannot read the chat if the stream is lagging. So okay, so May, the closed above, closed above, closed above. So the whole year, okay, from April of 2020, do you see any strong closing below from this point till October? You can argue that this is a closing below, but I have an argument against you that no, this is not a strong closing. We are ranging, okay? We are ranging at this point because of closed above, immediately closed below this point, okay? So you can because not everything is really to the tick precision. So you have to generalize a lot of things, right? This a strong closing relative to the weekly time frame? 69 points. 69 points is nothing relative to the weekly time frame. Why? Because on an average weekly time frame, what's the ATR? 422 points. 422 points on general, because I'm just taking a random candle and measuring it. So any candle, if you measure it, it's going to be above 300 points. So relative to that 300 points is 69 points good enough for a strong closing? Not really. I need a strong closing. We already wicked to this point. 69 points, yeah, exception can, but it's 50-50. You can say 50-50, but I would recommend about 100 points at least strong closing. It would, if it would have closed at the low of this point, not strong closing because it was failing to break bullish fair value gap. I'm not looking at any fair value gap. Okay, I'm just isolating this criteria and back testing this criteria in isolation, not making a single narrative, because I'm just looking at things with ice in isolation and measuring its probability according to its own self, right? So if I can isolate one thing and not project a whole narrative, it will give me a probability criteria, right? If I'm just using this close for this back test, right, a general back test, so it's going to be very easy for me to see when it works and when it does not work. If I'm including a fair value gap, for example, if I'm including a fair value gap to make a narrative, right, yes, it will give me a clear picture. It can give me a clear picture, but when to apply it, when not to apply it, it comes up with its own complexity. Okay, so as far as like how many days we have back tested, what, 2019, from 2019, right, from 2019 till basically 2 years. Within this 2 years we are using a single criteria, and it's keep on working again and again. So just because this happened, I will not introduce another layer of complexity. Okay, so yeah, this we closed below and immediately closed above. This can be an indication of a range. This can be an indication of a range, But we go, so I can bet at this point that we are going to break that trend, or I can wait for the next candle to close above for validation. For example, if I'm assuming that we closed above and closed below, so from this point we can be in a higher time frame range. So the higher time frame range from the low would be 10,667.9 till the high, that would be 12,474. Okay, and we are at the 50% of that range. So what are the basic assumptions I can take? The basic assumptions I can take it here, I need for a downtrend, I need a strong closing, because we have been moving in a uptrend for a very long time. So it's for a, even for the downtrend to continue, the price needs to chop around a little bit. The price never, like, it never falls down immediately. It gives hope, then it destroys your hope, and spirit then comes back down. So it's rare for the market to like immediately move in that direction. So this crash we saw, this is an exception. We have, it's very rare. This, you see, this is a rare case. But even in this case, before moving up, we had the long ass ranges. Okay, so the price was done at this point at March 20th, 9th March 2020. The price, it wanted to do, it has done the damage at this point, but it chopped around for the next 3 weeks with the large ranges. Okay, so what happens in the large ranges, the people, or the people who are trading will tend to lower their lot sizes. Okay, because as the range is large, the lot size gets smaller. It's obvious, and it's logical, and it's obvious conclusion to a large range. Okay, so where were we? At this point, okay, for example, at this point, we closed above immediately and we closed below. Okay, this, I can ignore this, but I cannot ignore this at the same point, because at this point I don't know. At this point I don't know. All I can see is that we closed below. It's not a strong closing, but still an argument can be made. So what am I gonna do? Either I can expect a range, either I can expect a range from this point, or a downtrend. Okay, or a downtrend, but I am going to lower my lot size because I'm not sure until the trend confirms itself, right? So the next candle we got after this point, still it's a bearish candle. So we closed wick. The next candle we already moved down. So even if I'm using this close and trading in the smaller time frame and taking a short from any of these points, I'm still getting rewarded. I'm still getting rewarded, because in the large ranges or any sort of a high time frame range, the bulls and bears both get rewarded. So it's just a matter of your execution, where you are executing what is your reward. So if I'm taking this to this point, it's basically 800 points move. Okay, even when I'm not sure on a weekly time frame, I can still assume that we can be a higher time frame range, or I can use a scalping method or any other method. So the next candle, we got a strong closing above. So as we are at this point, I can generally assume that okay, we closed above, we closed below, then again we are closing above. At this point, my assumption about the range is getting stronger. My assumption about the range is getting stronger, and we, as for example, if we are closing above this point, in my back of my head, yeah, this is a range, and it can break itself into an uptrend, because this is an high, it's an up close, right? In back of my mind, generally speaking, we are within the 50%. Generally we are with, this is the high, this would be the high of the range. This is all assumption. Okay, this would be the high of the range, this would be the low of the range, and we are at basically 75% or 25% of this range. This can be a general assumption. So I'm using any of the ranging methods, right? And this is my validation criteria and the invalidation criteria. The next candle, we got a strong closing above. Okay, so where we are now, at the middle of the range. See this point and this point. So if I were to bet, I would bet on a range. So you're not caring about the close above the wick, but the close above the previous close. No, 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 no. I'm closing above the wick because wick is the highest point the market has been to. Okay. For you can okay, think of this. Think of it like this. If I'm you, this is the close, this was the close, and this was the low. Okay, so the validation or invalidation criteria would be the high and the low, the high and the low. If you are thinking about the close below the previous close, you're thinking, but you're going down a trend, you're going down a time frame. If I'm talking about it in terms of weekly time frame, if you're watching the close above the close, so you're moving to the daily time frame, if that makes sense. I'm using the weekly time frame close, then the next close, if I'm waiting for the close, that would be a weekly daily time frame close. So that is not what I'm looking at. I'm just looking at it straightforward. So at this point, what is the logical conclusion I can come to? As we are closing above the wick high, okay, the previous wick, okay, what can I assume? The first priority would be given to a ranging condition, and it should be given to a ranging condition. The next, what if the range breaks? Then it's all uptrend. Why is it an uptrend? Because we are getting we have gotten two closes above. So even if it's a range, the odds of it breaking towards the upside is more than it's breaking towards the downside until we get an invalidation criteria. Okay, the next candle we got a closing above. Okay, the next candle we closed below. So the assumption of a range was good. Honestly, I didn't knew this is gonna happen. Okay, so as I'm going through all of this, okay, generally the assumption from this point, you see how market can tell, like from this we got a closing above, immediately closed below, immediately closed above, and the close below. The moment we get this closing below, still the priority is the range, but if the range breaks, it's going to break towards the downside. This should be a priority, like this should be if you say, okay, if you are prioritizing in your mind, this is how I'm thinking about this, right? Closed above, okay, and closed below, closed above. Okay, at this point still it's range. I'm trading all because we are, this is the high, this is the low. As we are trading within this point, generally I'm prioritizing range, but with the with in my back of my head, because you when you are trading the higher time frame, you don't know, even on any time frame, you don't know when the range start and when the ranges end. Okay, so I can get an indication of where the range is going to start. It's more probability, it's more likely, or it has more probability, the criteria I'm using for the indication of range. But when will it break? That is another thing, because if I'm assuming it's gonna range and I'm taking short term trades, but it starts to move in a trending market, then I'm gonna miss the whole move, because my base assumption would be wrong. Anyone who is here is are you completely understanding what I'm trying to say, or is it just moving above your head? Is the criteria solid? And I'm going to emphasize this. This is the base case, and keep this in mind. We are working within the weekly time frame. We are working within the weekly time frame. The logic would be same on a smaller time frame, but you'll get a lot of fake outs. Range start and trend start is similar to risk on and risk off. Uh, Risk on and risk off. Risk on and risk off is not. Okay, I understand risk on and risk off from Wayne's point of view, if you know what I mean. Wayne McDonald's. So he will say, okay, risk on risk off Japanese yen and dollar, and risk on would be the stock market. So, okay. So we were thinking about a ranging condition taking this low and this high. As we closed above, still we are within this range, but what would be the priority? Yeah, so what will I give the secondary priority would be given to an uptrend, but the main priority is what we see. What I can see is that we are ranging. So this is the first assumption. And on the layers of assumption, the first layer of assumption is that we are in the range that is fixed. Okay, that is no, it's no denial. We were not sure at this point because it could have turned into a downtrend from this point, but the moment we got a closing above, I got three closing above, closing below. So at this point, I can sort of saw this whole thing coming. Okay, so I'm not using the close above and close below as this happened. So you know when to stop looking for this criteria. Yes, this is a technical version. So for this criteria, right? So as we closed above, the main assumption priority would be given to the ranging condition, and secondary would shift towards uptrend. Okay, the validation criteria. Kaboom! Do you see it now? We got a strong closing above, another strong closing above, another strong closing above. So you see how the mode is changed. And one more thing, one more thing. It happened. BTC is good. BTC is good with this, but not on a smaller time frame. Okay. I'm in a flow. Basically, Wizard. I was not thinking about coming live. I was just backtesting and sticking to the chart on the Nasdaq. So I'm gonna go to BTC, but as understand this logic. Okay, I understand BTC, right? You see this point. What was the date on this? 31st. So end of the month, the first. September was a chop. October was a October was what? A chop. What happened at the start of the November? What do I tell you again and again? If something is not working, it's going to start working again within a month or 2 months. Depends, yeah. Depends on the time frame. You see, 26th October 2020. Do you see it? Ooh, November start. November start. Ooh, the whole month changed the course of the trend. From November. So we are doing this again. Closed above. We closed above, immediately closed below, but initially it can be a downtrend. Initially, this can be expected as a downtrend unless we get an immediate closing above this point. Okay. What do we see? 21st March. Okay. We ended the year here at this point. 2028 December 2020. The year ended. Okay, we got a strong trend for about from October till December. October till December. 1400 points move with the trend being intact. So what happened? The yearly candle closed. The state of delivery, if you may, changed. Why I'm saying it's changed, I do not know it's changed or not, but look at this. Still intact. It's still intact. Never got a strong closing below till this point. But in hindsight, from this point, in hindsight, I can say, yeah, it's a long ranging, like it's long ranging. It's still intact, but it's, you see how long we were here, this specific range. We were here for about 35 days and 920 points range. 920 points range. We never got a strong closing till this point. This was the first February, the first week, second week, and we came back down to the previous start of the year's range. So you can say, because the time is taking a reference of the year start, this was the 4th January low. We came back to 4th January low. We consolidated at some point, moved above the consolidation for a brief period of time. We came back to the low of this consolidation, and then we chop. We closed above, immediately closed below. At this point, it can be a downtrend or a range. So the downtrend would be priority at this point, and range would be a second priority until we get a closing above. So as this is happening, again the criteria would shift. This is the low of this and the high of this. We are at the middle of this range. So what would be the immediate assumption I can think of would be a ranging condition, and the second assumption would be on the uptrend. The first assumption is the ranging, okay, and if the price breaks, it's going to break towards the upside. We got a closing above. I could have bet on the range to break, betting on the second priority, second assumption, that the range is going to break. If it's going to break, it's going to break towards the upside. So and this was the point. We closed below this point, we closed above, still working within this specific range, but this was a strong closing relative to the previous one. Because I've taught myself, you see this point, 107 relative to the weekly time frame. I teach it because I've integrated very clearly into my mind. So this is how I teach myself, right? Okay, we closed below. What can I assume at this point? Okay, we got a closing above. Okay, you may think that, okay, this is nothing, this is 1-2 candles. If you think about how many trades have you won, about, if it's from the low to the high, it's 800 points. The least I can take from this is 200 points. Okay, the least I can take from this, having an assumption that it's going towards the upside, or the ranging condition but moving towards the upside. So I'm betting more towards the upside overall by default. So can I not at least take 200 points? I can take this. but I have to be very patient, right? This was the closing, and if you think about it, okay, this was a relatively strong closing, but we were working within this specific range. Okay, so as we were here at what do you say, what is this, 13,750. This was the validation criteria and this was the invalidation criteria. Oh, okay, this was the invalidation criteria. If I draw a horizontal line, okay, we came back to this point, then closed above, right? What happened? Did we closed first? This was the invalidation criteria. The next candle was, this was the invalidation criteria. As we got a closing below this candle low, but we were still working within this invalidation criteria. Do you understand what I'm talking about? We were working because this is the high and this is the low. This is the validation criteria, this one, and this is the invalidation criteria. Did we get a closing below the invalidation criteria? No. Were we moving down? Yes. You see this point? Interesting, isn't it? Never got a closing down. We even wicked, and we are moving through wicks. Okay. We got a closing on a small, you can say, yeah, it's relatively strong. So it's still moving down, but from this aspect, we never got a strong closing. What happened in the next candle? We never got a strong closing below the invalidation criteria, and we were still moving. See how interesting this is. I don't think you understand it clearly, but this gives me an indication that either we are in a range, this specific closing, this one, right? This one closing, either we are in a range, or even if it's a range, I'm more betting on the odds that it's going to move down. So that is clear, okay? But this was the invalidation criteria. As I'm betting on the odds just going to move down, I'm still getting rewarded 400 points from this point. We never got a closing below. Okay, the next candle opened, so this becomes the validation criteria. This becomes the validation criteria, and this becomes the invalidation criteria. And we never get invalidated, and the trend resumes. It's fucking amazing, yaar. Like as I'm talking to you, I'm already telling it to myself, so it's really interesting, yeah. Because I'm just using a criteria and using it on this specific thing. So if I'm using this low and this high as an invalidation criteria, here we got invalidated, but never got a closing below this point, and never got a closing below this point. Look what happened. Fucking brilliant. Like, this was the strong closing we have gotten, like, after all of this. These all black candles were like, I don't know what it was, but it was long as ranges, and we got another closing above, then we changed the whole thing. See how good this is, yeah. Validation criteria, validation. We are getting validated. This was the first invalidation criteria. Okay, this was the first invalidation criteria. How many points did it overall give? 800 to 1000 points. Okay, and not because the downtrends are really fast. Downtrends are fast, so you have to be very precise with your timings. So it's not only one time, it gave me about 2 times. This trade gave me 2 times 800 points. How? This was the validation criteria, right? So generally speaking, I'm already biased towards the downside. So you see this candle, this is 500 points, we closed above again, but still never got a closing above this point, so we are still invalidated from the weekly time frame. The next week we closed below again this point, but this was a close towards the downside, still validating the trend which we had to this point until this. Okay, until we had this. And wait. Okay, so so this is interesting, right? If you go to November 2021, November 2021, closed above, closed below, immediately it tells me that we are in some sort of range. Immediately. So what I was telling you earlier, that the price, usually what happens when the price is turning in a higher time frame, it will starts to widen. It will widen it, the width will increase overall. We'll have large ranges, closed above, closed below, closed above, closed below. This was the, but where you see this point, we closed below this point. Do we get another closing above? No. For next what, 40, 60 days, 42 days. See this? And then what happened? You see this point? We never got a closing. We never got invalidated from this point. Okay. We still had the range. What happened after 42 days? See, 27 December 2021. From November to December, we had the range. So if you look at this November, it's going to be some sort of a doji candle. What happened in January? Get validation again, 2022. And then what happened? Till March. From January till March, this was the first close we have gotten. Okay, this was the first close. We trend for 3 weeks, then the trend resumes again from till, you see this point, when it is ending. The first week of March, the second week of March, third week and the fourth week of March, we had the counter trend move. What happened when the March ends? We continued the move towards the downside. Okay. Close below, close below, close below, close below, close below. what is this? Okay, now watch this till May. Okay, 16th May, we got a closing above, immediately closed below, immediately closed below. From this point, what can I assume? I can assume some sort of a range. We did get a range from this point, so this would be the high of this candle, the low of this candle. But as we are ranging, what are the two assumptions I can make at this point? The first assumption is going to be we are ranging, this would be the low and this would be the high. The second assumption on the priority list would be that if we break, we are going to break the range towards the upside, okay, until we get a closing or invalidation criteria. What happened? We did get a break of the range overall. Keep track of time. 4th of July, 11th July, 18th July, and then we chop, came back to this point. So this goes on and on and on, again and again and again. So I hope you understand. And what is important on this here, sometimes we get some sort of an exception, but still, if you look at it from this point of view that we are ranging and make it on a priority layers, make a layers of priority, then you can still navigate all of this. Navigate all of this. Okay, so from this point we got a closing above, closing above, closing above, closing above till now. So and this is where we are now. High drawings. See, the wicks are huge relative to the body. Okay, this is interesting. Okay, so anybody who has any questions? Sure. So what we have back tested, what, two years with a single criteria in our mind, and it's a good criteria. Okay, so what is next? What is next? Let's check BTC. Okay, wizard, time for me to, what do you say, flex. Yeah. When you were here when we talked last time, okay, just an update on what I said last time. What I said, I was talking to you and I said, if we move no longs above this point, if we move below this point, we can collapse down. So that happened, right? How many points did I get from this? About I got about 1500 points from this point. But you see this point, 1500 to 1200 points from this point. We never got to this point. You see this point, exact. I bought on my funded challenge. Oh, come on. I precisely mentioned that we need to move above this specific box. Okay. I need to move above this specific box. So that narrative was really good. If you remember how casually I said it, hey, it's not ended. If you plot this and move it up further, at this point I'm right in everything I said, right? What I said, like how many days ago told you on 21st of 21st, no, it was not 21st of October. I mentioned that we are going down if we move below this point. So we came back to my specific box, retested it 2 times. Brilliant. It's brilliant. Acha. Then what did I tell you about? Did I tell you anything about Qs? I think not. Yeah. Okay. I'm gonna just share one thing about this specific trade. A visit. I bought. I on my challenge. I bought the challenge on 24th, right? On what is it? Right as I bought the challenge, this was my buying criteria. This was my buying criteria. I bought it, and guess what was the risk to reward on this? Like literally, I was risking about 30 points on the Nasdaq. As we moved above this point, literally I sold it here. It was somewhere around here. Yeah, I sold it a little high. Check the risk to reward. I'm not gonna people who are here may not believe this, but hey, it was slightly 15 or 16, right? Literally bought it here and sold it here. So I don't think I mentioned you. This is I use sometimes. This account I use sometimes for another screening purpose, but overall this was my buying criteria. Okay, 1 to 16 risk to reward ratio, bro. 1 to fucking 16 risk to reward ratio. Magic boxes, exactly. Okay, hey, one more thing. GBP. What happened to GBP, JPY? GJ. Okay, na Jija. Oh, 21st, right? 21st of October. 21st of October. Yeah. What I mentioned you about the GJ? Did I tell you to go long? Did I tell you to go short? But I said, like I said, it may not come to this point, but I would really not short it, if you remember. What happened to GJ? And I explained that we are very close to this point, right? We are very close to this point, so we are gonna check this out towards the upside. Wait, so BTC I should close and look for sell buy. Yes, exactly. I said longs, and not. And at first, I was not sure about the whole GJ because I don't trade it. But as I looked into it, I said, "Can I'm going to be very afraid even to short it in a short term on the long term. So no shorts at all. No, neither the long term short, not the short term short. So GJ moved. I fucking hate GJ. 219 points, like it gives you some 100 points and it like ugh. So it does not move. What was, did I mention anything about gold? Yes. What is this? The narrative is still in play. Have this on your chart. This was the buying zone for the long term time frame. Boom. Okay. Oh, I did not mention this specific point. Okay. I haven't streamed for a long time, right? A week or two. So if I would have streamed, I would have surely talked about this specific level. We got 3 touches from this specific point, and I missed out on this specific. BTC based on your higher time frame narrative. Visit if I was explaining you Nasdaq, so it's just specific to Nasdaq. Okay, I have not closely back tested that criteria on BTC because I don't expect it to respect. I don't expect BTC to respect all of these clauses. Okay, it will give you 50 or 65% probability, but nah, I don't trust it. You can still, if you like the idea, you can test it on different markets. But I personally have back tested these things on Nasdaq and S&P 500. If you check the Dow Jones, oh, Dow Jones is no, it's an animal. Dow Jones will not respect anything. Okay, so every market has a different strategy. If I'm you don't understand the complexity of the things I talk about. Okay, so if I'm talking about Bitcoin, I'm specifically talking about Bitcoin, and Bitcoin, the strategy I'm using on Bitcoin is completely different to what I'm using on Nasdaq. Okay, but it all comes down to the simplest form, the boxes which I draw. Okay, the boxes are in it of itself nothing without my interpretation or without the conclusion I make, right? For example, if I choose this specific point, it how am I coming to this conclusion is completely different from the box I will draw on the Nasdaq. Okay, it's completely different from how the boxes I will draw on the Nasdaq. The conclusion will look, the end result will look the same, but how did I arrive to that conclusion would be a completely different thought process. Okay, so keep this in mind. If you are back tested a system on one thing, it only works on that specific thing until you have back tested a different or the same system and have a probability criteria. Okay, I you know what, yeah, I want Bitcoin to move further up, right? But who the fuck cares what I want? Okay, and I'm not gonna go into details because it's of Bitcoin, because I don't wanna get indulged, because I'm doing something with Bitcoin because um it's psychologically draining for me to look at this chart, generally speaking. Okay, so nah, nah. But overall, I want the price to move further up. Bitcoin can what can okay, I'm just gonna undo something. Ruko. Yeah. Really? Okay, okay. 65,000 to 66,000. 66,200. What? Okay. Yeah. There you go, bro. I'm not interested in shorting this. Okay. Okay, I'm just gonna mention this thing specifically. I don't want to talk about it. I made a fucking mistake, so I don't want to talk about it. But generally, from 65, you cannot avoid human stupidity, okay? So, whatever you do, regardless of. Um, anyways, 65,200. Okay, just take a note of these coordinates. You waited for the to short Bitcoin. No, come on. It can go down, but I'm not interested in shorting. The 65,238 to 66,255.74. 65.74. I'm not interested in taking a short. I want the price to move above 68. Then I'll be more inclined to be happy. Just because I'm gonna do not do anything. I'm just reading this chart. As for now, I have already did what I have. Okay, so this okay, 4 people are watching. Okay, nice. Okay, so the DXY. If you remember this point, half of this statement is really correct. Yeah. I don't. Okay. I really. Fuck it. So half of this statement is correct. This was written on 3rd of October. This is going to make or break the downtrend. If the price use this as support or stay above this point, then the DXY rally will change. And I mentioned something, the whole market will collapse. The last point of this statement was incorrect. We are trending on the dollar index and on the Nasdaq index. So I do not use the inverse correlation, the Nasdaq and the dollar index correlation. This was just an assumption, and I trade Nasdaq individually, and so the dollar, I don't trade the dollar, but generally keep an eye on the dollar index and how it is performing. So this was the down break of the downtrend. So if okay, let's go back. If you watched me on September 3rd, there was a stream I streamed on September 3rd, and I draw this box, this targeting 100. This was my target. We came very close to the target, right? We moved above the invalidation criteria, and perfect. The area you said is where I plan to exit. So you're trading Bitcoin and you're trying to short. I would not short it. What is it that you are talking about? Wizard, QQQs, Nifty, Gold, Bank Nifty. You bought. I am not responsible, and I am not a. What do you say? I'm not your financial advisor, just a disclaimer. So I hope. Okay, at this point, I'm not reading this. I am in this point. I'm hoping, right? But generally, I would not short this. Just keep this in mind. I'm not trading this. I'm not touching this. I just want. This is personal desire which the market doesn't give a fuck about. So I want the price to move above 68,000, choosing this as support. If it does this, good. If it moves below this point, then what? Then what can I say? But there's a highly likely that we are going to chop around this point so for some time, then move further up. Okay, brilliant. That's nice. For those who were here when I streamed on 6th of September, 6th of September, it is on a Saturday, 7th September stream. If you listen to me, I'm talking about at this point 53,000. I exactly said K 53,000 is the bottom. And we are going above to target 65,000. And if you look at it from this angle, it is unbelievable how precise I was. Exact to the tick, I said 53,000 is going to be the bottom. And we are going to take out the major highs. And we are at 68,000. So that's nice. Don't to avoid trading gold because on a prop firm and focus on Bitcoin because of manipulation. Yes, when you came to my stream for the first time, I told you don't trade gold. If you remember, I told you to shift to Nasdaq for a reason. Okay, there is a guy who I'm friends with, and he also trades gold, and I always tell him, yeah, come on, why don't you understand? Like you have to you have to have some bruise or scars, then you'll learn it, or waste your 1 or 2 years, then you will learn. Just understand what I'm trying to say. But he says, I understand why he says, because he's human. We have familiarity bias. We feel more comfortable, and what we have worked on, we feel that uh, if I've if I've worked on gold, there is likely more probability that I'm gonna win on gold. But that's not true in trading. That's really not true. If your strategy is not working, or if the gold has its own personality, it will continue to be like the way it is, right? And people are enjoying trading gold as for now, but bro, this is an uptrend. Okay, this is an uptrend. If you trade gold on like this period, like fucking ugly. So a lot of manipulation, a lot of width. Gold has a huge width. You do not understand what the width is. So width means basically if the price wants to go from a place A to place B, it's going to take for it's going to take a lot of time. Okay, so if point A to point B, gold has its own time frame, in which it moves. So that can be a weekly or monthly time frame. I was explaining Nasdaq on weekly time frame because it's good, but it's fast, also fast on a smaller time frames. It's crazy because I'm comfortable in this risk management protocol. Nah, your risk management is completely based on your strategy. I don't know what your protocol is, but your risk, how are you calculating risk, is based on your strategy. what the strategy is for is to calculate the risk. Okay, reward is something that comes after the risk. First you have to calculate the risk. For to calculate the risk, okay, you need a strategy. So it goes like this. If you put it in layers. Eric, you're still here. uh I took a lot from it. Take care, brother. Take care. Take care, brother. So visit, if you think of it like this, you why are you using a strategy? You're using a strategy to measure risk, nothing else. You're not looking for direction, you're not looking for anything. The crux of it is risk and then reward, right? If you're obviously your risk should be lower than the reward, so that comes in play, but the base case is risk. Okay, so if your strategy is based on gold, your risk to reward is smaller 0.0. It's harder than it's on a smaller. Okay, okay, okay. What is your lot size according to your? What is your account size and what is the lot size you're using? I'm gonna make a protocol. If I were you, how would I do it? Okay. So keep this in mind, visit. I've been streaming for like how many, like for how long? Like I started streaming on, yeah, from this point. Okay. So I'm gonna show all of the criteria. 10K prop firm. Okay. All of the things I have mentioned in the past, and it's all live. It's all live, right? Nothing has changed. Like everything I mentioned you here is on my live stream. So this was my first criteria on September 9th, right? Why was the box at this place? Because this is the assumed risk. This was the risk I was assuming. The next criteria was this. Okay, so this was the next criteria. We are assuming risk, and this was the next one and the next one, this point. So as it's in a trending market, I'm giving all of these narrative. If it was a ranging market, I wouldn't even talk about it. And one more important thing, if I don't know if it's still there or not. This guy Eric was here when I started the stream, when I used to stream on my laptop, right? So in January, February, right? You know, in at the start of the 2024, if you go and watch my stream, you don't have to, you don't really have to, but I don't even know which one stream, but I did mention as we were here that I said ki yaar, you see, exactly I told this point. I showed them this chart. I said ki yaar, you see this point. Okay, they said yes. I like, you see this is a start of a trend from this point to this point, and everyone said yes. Okay, I mentioned everyone ki yaar, at to start of this, I said ki yaar, you see this point, we are going to go again like that from this point to this point, like this trend is happening again at this point. Yeah, obviously, don't stress, right? I cannot expect you to understand it for the first time. I've been doing it for very fucking long time, yeah, very long time. Like, so it's okay. I know you don't understand. Okay, so even on the weekly gold, right? Closed above, closed above, closed above, wick, 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 closed above, ranging condition, closed below, closed above, close, 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 close. So what is this indication of? It's a trending market. Okay, now look at this point. We closed below, closed, still moved down, but width. This is what width is. Like, motherfucker, what is this? Like, this is really shit. Like, shitty. You see, this width, 85 points width for 63 days, then we moved down, then we closed above, closed below, closed above, closed below, closed. So I don't like the width of. Okay, you see this counter trend move is also contained within this width. You see this channel. Okay, at this point we broke a whole channel, then we made another width. So if you see a chart like this, must just run. It's gonna waste years of your life. Okay, and if you see a chart like this, closed above, like user trending, yeah, scalping, like you know why I don't like I can scalp. You know, you have seen me scalp, right? I don't like scalping because the chances of error or human stupidity is more in scalping. Okay, and I don't like getting in, getting out, getting in, getting out. I like, because I have experienced something better than that, and which is buying and holding a trade. 1 to 10 risk to reward ratio, unheard of. Like, there was a time I used to scalp like as 1 2 3 months, and then I used to take a swing trade which will cover like 1 2 3 months, and I would make about 1 to 10 hour overall, 1 to 10, 1 to 20 hours. Then a single swing trade would give me more hours. Okay, so there's a whole universe that exists beyond scalping. Scalping is good, but gold is ugly. Scalping on Nasdaq is good if you have a solid system. Scalping is, I'm not saying scalping is not important. I'm just comparing it. Okay, I'm just comparing it to, in relationship, yeah, in relationship to something, right? In relationship to, what do you say, swing trading. And one more thing, why do you think I have a high risk to reward ratio? Because I can scalp. Okay, I can scalp very very precisely, but I don't personally like it. So how would I use my scalping? I would look the higher time frame trend, then go into the smaller time frame to reduce my risk. I would take a lot of paper cuts along the way. Okay, so I would take a lot of paper cuts, but my risk to reward is both fit, like really good. So it covers everything. So that's why my risk to reward is really high, like 1 to 16 risk to reward ratio. It's not one time, like this is happened to me like 2 times in a month. And if you forgot about this point, okay, I think we were here, right? I removed that specific line. You remember 487.8786? You see, Okay, as a beginner, okay, I'm gonna tell you one thing. You should, yeah. So I got what, from a risk to reward standpoint, I got 15, 1 to 15 risk to reward. Pata nahi, I don't exactly remember. 1 to 16, 1 to 15 from this point, and then again from this point 1 to 16, 1 to 15, two times in a month. So it's really good. As a beginner, you should understand a general direction of the market, then go into the smaller time frame, align yourself with that specific narrative or with that specific trend. If you want to categorize these things, right? So you cannot do without scalping, you cannot do without swing trading. You have to have knowledge of everything for you to be successful. So first you need to learn how to, overall you need to learn where the market is going, whether you are in the trade or not, whether you can get into a trade or get a good risk to reward. That does not matter at first. Okay, I'm making a path for you, like this is the path. Okay, everybody is doing, I don't know what everybody is doing. Narrative, basically, in a sense ke, for example, if the crux of things, right? So as I explained, risk to reward is everything. Trading is, whether you say it in a different way, whether you, so there is a single truth in a sense. If you look at deep enough, you'll find out the risk to reward is the crux of trading. One more thing, if you are going to have a path, first you need to understand the market direction. Okay, first you need to have a bias, a higher time frame, a lower time frame, any of the bias. Then you use your tools to reduce your risk. Your tools can be anything. Do not get into the conspiracy mind of like, okay, so it's going to take the high and Monday news, it's going to take FOMC high and no. Okay, you need to generally understand. Okay, you I for with like right in front of you, I've back tested 4 years or 3 years right now, like this from the start of the stream. How many times do I'm streaming? Like I've been streaming for 2 hours now. From the start of the stream till now, I've back tested about how many, 4 years. See, or 4 years. Uh, Within this 4 years, okay, each year has 52 weeks. Okay, each year have 52 weeks, 12 months. So 12, 4, okay, 40 and 40, 48, okay, 48 something, like 48 months or something like this. How many FOMC was there? How many FOMC? Because we have at least 4 major news within a month. Okay, did I take an account of those FOMC? Listen to me. Listen to me. Okay, did I? I'm talking to you. I'm talking to you, right? Like what you saw was the truth. What I see, what I saw, and what I was telling you, we saw it together, right? So, did I took an account of any FOMC? No. Okay. Did I take an account of any of the news events? Because every month has at least 4 news events. Okay. Was I right about the direction majority of the time? Yes. Should understand what to pick from the data. So, will what is the news therefore to reduce risk to reward ratio? Do you understand now? Did it affected the direction at all? No. The max I was using was a monthly close, and the monthly close was, the logic behind the monthly close was, a cycle ends. For example, if like it resets, as a monthly candle closes, it resets. Okay. Say anything like flow resets. So you can say the order flow, you can say the state of delivery, it resets. So I was taking general accounts of the things, looking at it from the bird's eye view. So I took an account of just a closing price. Did it affected the news affected it? No. I was just taking the closing prices. So I was right about the direction, so I can take that narrative regardless of what happens, whatever the narrative is, whatever the news is. I do care about the news enough to not trade it. Okay, enough to not trade it because I know it's gonna. What is the job of the news, regardless of whatever it is? First, I'm going to take the closing prices or any other thing to for me to determine my bias. Once I have my bias, then the news is there to basically skew the risk to reward ratio. I look at it as a hurdle in my narrative or in my bias or in the direction which we are already going. So that is the way you have to understand the news, right? I don't care about what the FOMC numbers are. I don't care about like any of if they're raising the interest rates, any of things. Okay, I don't care. All I care is about the risk to reward ratio. Risk to reward ratio comes after. I never trade the news. I never, never trade news because was I taking account of news? No. Was I? You have to understand this. I was going through like 4 years right in front of you, and we were like, okay, and it's okay. It's okay, no problem. The moment you feel that you've missed a setup, not only you are feeling that you've missed a setup, a lot of people who are feeling also that you have missed a setup. Keep this in mind. If your risk to reward is skewed and you're feeling like you missed a setup, if you stop yourself from entering, a lot of people do not have that willpower and will enter at that setup. So then there is a high probability then the price will come back, because what you are watching at the chart, a lot of people are watching at the same chart, and we are fighting against our own self, basically, right? Someone has the strength or the willpower to be disciplined, others don't. And others, why do they not have a discipline? Because they do not have a vision. What is the vision? A vision basically is giving me some sort of a light as I'm moving forward. So what my weekly time frame is my light. It's giving me as I'm moving forward. It's giving me the okay. It's Wednesday. It might not close. So I'm watching 3 days ahead. You understand the point, right? A lot of people are just trading on a 1 minute time frame. Okay, they're it's going up, it's going down. So as it's going up, their whole mind is shifting towards everything. They're using the tools they're using, they're more focused on the upside, like bias change, bias change, bias change. But I don't think like this. So I do not trade news, but if you I was back testing, now I'm extracting data out of the back test we did. So keep this in mind. I was not tracking where the news was. I was not tracking anything. I just the closing prices was clear enough to me give me a direction. So it gave me a direction. I was right about the direction. So when it comes to the real life trading, now all of a sudden I will care about the news. Why? See how it works. I should only care about the news as long as it's like right in front of me. I should not trade it because it's going to skew my risk to reward ratio. Okay. So generally, you should know a general direction of the market. After that, make good risk to reward ratios. That's all. Okay. Internalize and integrate. I know you will meddle up. I used to try to think like, yeah, I understand now. What the fuck is wrong? I mean, like it used this is self-talk, right? The fuck is wrong? You understand it clearly. Why cannot you see it? Why cannot you see it? You know everything. What's wrong? Like I used to force myself to internalize, but internalization or integrity or integration only comes with screen time. Yeah, as I've moved forward, I have realized that it cannot be forced. Yes, I expect myself a lot from myself, right? Kara, if I understand it, I should be that is enough for me to internalize and integrate one thing. Because I think, yeah, if I understand it, I should be able to do it. So, and if I make a mistake, I should not make the same mistake again. Like this, these are the core values, right? Uh, So it only comes with screen time. It cannot come without screen time. Why? Because it's time. Okay. Everything we have talked about the 4 years was in 2 hours. Okay. So the market cannot manipulate us. Okay. What can manipulate us? Our own minds. How our own minds manipulate us is within time. Do you understand? Okay. If I, for example, if I'm holding something or a willpower or some sort of an aim, and I'm motivated or any other thing which I'm using to boost myself, through time it's going to decay. You do not need anything. Okay. The only book you need is your backtesting chart. And I am hinting you one, two obvious things that this is how you take data or input in your mind. And you think about it. Yaar, yaar, I was I was not thinking about any sort of a news when I was backtesting. Huh? Why the fuck do I care about news all of a sudden? You have to think about it. The part about the time perception in backtesting affected today's session. I'm already telling you about this. Like, I was not at the time the monthly close. Like, if there are areas of period where my stuff does not work, right? And I have specifically my stuff stopped working in 2015 and 16, and it really bothers me. I was like, oh, anytime now, 2015 is gonna come anytime. So this was like 2 years, a year ago. So I used to think really about these things until I figured it out. Yeah, why it does not work, why it works, why. So the basic conclusion one can make out of it, yeah, okay, if something is not working, Just don't trade it for a month, yaar. Wait for a next candle open. Okay, I'm not talking in terms of smaller time frame. Definitely, yaar. So I was kicking myself Monday, Tuesday, but okay. So whatever you are think of, okay, I'm going to explain one more thing to you. This is data is data, okay. A data is data, whether you are directly looking at the chart, whether your input is input, okay, whether you are reading a book or any other thing. If you're reading a book, you are trying to understand what's written on the book of the other person's perception of the market, or what he thinks about the market, right? So generally you are indirectly taking data from the chart, indirectly taking data from the chart with a its own narrative. Okay, it may give you a sense of security because a book will not negate itself, a chart will. So it will give you a sense of security. I hope it does. A chart will immediately give you feedback. You correct the feedback. If you cannot correct the feedback, it will stay with you. So that's why I say, "Care back test, bro. Back test. It will give you feedback." Okay. For example, if you're reading the book about mental trading game, he is somehow he thinks about, okay. What he thinks about trading is definitely based on how he trades or his strategy. Yeah. Okay, okay. You tell me. Okay, well, you tell me the essence of poker or low odds, as you can say. What is poker other than a low odds game? Crux of it, just simple. Basically, your risk to reward is really low. Your risk is high, your reward is high, but probability is low. Okay, you win rate is low. You can think of it like this: 1 out of 10, you're 2 out of 10. So if you have this some sort of a criteria like this, that you're winning 2 out of 10, what is the what is the mathematical way to get ahead, right? If you're winning 2 times out of 10, the mathematical way is to win. When you win, you should have your biggest lot size. To have your biggest lot size and your win, you should know when your odds are in your side. Okay, do you understand? Okay, forget about the book. Think through the logical aspect of it. Think through the logical aspect of it, and I'm gonna decode it, right? I don't read these books because generally, if you understand probability win rate criteria, you can. And if you are winning 2 times out of 10, ideally speaking, you should know when are these 2 times, and you should bet big on these setups, or when odds are in your favor these 2 times. In other 8 times, you should have an idea that these are low probability criteria, but still you are betting, but with a low size. The differentiator game theory. No, you don't have to get into this stuff. Just think about it. Yeah. So, in terms of trading, if your win rate is low, but your risk to reward is high, you're still ahead. So, there is no mental game. Do you really think that I do have a mental game? Oh, come on. I have setups. And according to the setups I have shaped myself, I don't, I was not born with all of this. Like, I learned care what is the probability, what are the odds, and what should I do. For example, if it's a weekly close, so I should fucking wait for a week. Okay, then it's like, yeah, okay, yeah. I should wait for a week to for the odds to be in my favor, whatever the reason is. I should know what am I looking for, then adjust my perception according to that thing. So it's all basically back. It all comes down to back testing and integration. What you when you have a system. First, you need to have a system. Then you can have a mental game. Because, for example, I have a lot of setups. I bet some big amount of my swing trading setups like these two risk to reward setups and everything. But in a sense, yeah, how do I know that I have to bet big on this? Do I have a mental game, or do I force? Oh, like, do I manifest focusing on my mind? Oh, give me big risk to reward ratio. No, yeah. Visit, I know a lot of things. Basically, in a sense, my whole mind is to look the crux of things. Like I have to give. Since you're 7, I assumed you do the same thing. I want to know the crux of things. So I get to the depth of it and now bare bones of things. So if you go into the depth of these things, you'll realize, yeah, you do not have to have a mental setup. A lot of people. Okay, I'm gonna explain one thing. The people who talks about the mental setup, they do not have a strategy. Since they do not have a strategy, it takes a toll on their mind. You see how they're chasing their own tail. Since it takes a toll on their mind, they learn how to deal with their mind while using the same shitty tools. So, of course, they need a mental game. One mental game you can add to your mind is the single mental game you can add is you should be able to hold your fucking trades. Okay, one thing I'm gonna tell you. There is one thing and one thing only which I sometimes struggle with personally. Then there's nothing other than this. One thing is, if you lose on your trade, you should be able to get in, regardless of whatever it is. If your system says you have to get in, whether you are doing anything, like whether you are depressed, whether you're happy, whether you okay, so you should be able to get in and follow your system. That's the first mental thing you have basically, right? The next thing, if you are in the trade and you're supposed to be in this trade for 20 days, you should not get out on the third day. This is what I'm telling myself. Okay, you should not get out on the third day or the fourth. Okay, this is the two mental games. If I'm supposed to be in the trade for 20 days, I should be in the trade for 20 days, regardless if I hit my stop loss, break even, whatever. These are the two aspect of the mental game. Yeah, a lot of times, bro. I swear to God, I would be a lot more rich, like a lot more rich, if I don't do this shit. I do it sometimes, like so. It is what it is, bro. Since it exceeds my reward, it exceeds my risk too much. Like so then at that point, I'm like, yeah, okay, I'll get out because the market does not know how much risk to reward you're getting. What about tilt and over trading? Yeah, tilt. Okay, what is tilt? What is tilt? From my point of view, it's like yeah, everybody has a plan until you get punched in the face. So that is basically tilt. Okay, tilt is generally emotions. So for that, I told you about the plug of objectivity. How can I be objective? I mean, look at the fucking chart. If it's closed above and closed below, go for a walk. Okay, tilt comes from something which is unseen. You're fighting a ghost. You don't know what's coming next, so you cannot anticipate it properly. So you're just assuming and trading your emotions. So that is basically tilt, and you go deep and deep and deep. Basically, what happens in a tilt is like, yeah, if I take a loss, then I take another loss, then I take another loss. So as I'm losing, to get back to break even in a single trade, I have to increase my lot size. As I'm losing more, I'm increasing my lot size. You understand? And over trading, yeah, over trading, it's all setups. I don't think there is such thing as over trading. It's all setups. If you have a category of your setups, there is no way you can overtrade. Like if you're really stupid and boredom trades is one thing. Like if you're bored and you're taking trades, that's something of human stupidity. You should not be on your chart, because that is what I faced after I become overconfident. With PO3 I have to remember what you said, forget names. No, PO3 is like, yeah, I get the point. PO3. Yeah, I used to think, oh, okay, now I understand what's going on. Oh, PO3. This is something I understand. So what happens is, uh, you see this point. A point will come. A point will come that you will realize the futility of your stupidity, the futility of your emotions, and you'll, how can I explain it? Feel disgusted with your emotions, then you leave it. What happens in everything? Visit, if you, even if you measure anything, I can explain this. If you measure anything, it behaves like the market. If you keep a track of your emotions, it behaves like this. I don't know if you can, if you get into depth. So if you know about the Dunning-Kruger's curve. Uh, do you know about the Dunning-Kruger's curve? Yeah, basically, it's something like, yeah, at the start of anything, if you start anything, you'll be overconfident. So your chart will go something like this. Then it's gonna crash. Then it's gonna. This is how your mind will work. With anything, like anything. At the start of anything, you'll be overconfident, which will then you'll realize that the things are not as they seem. Then it's gonna crash. Then you realize, oh, it's not that as bad as I was thinking about. So it's gonna do something like this, something like this, something like this. Then you'll come back to the same realization after years. At first, which was a placebo, initially when you had the information without integration, you reached a level of a placebo, or a mind tricked you that you know stuff that you didn't know, right? And you are able to execute or anything. Then the realization dawns upon you. Then you will throw everything which you were using, because it's going to hurt you. Some sort of your expectation is going to get hurt. Then you're going to throw something. When you throw it, then you realize, okay, it was not that bad. I can use 20% of it. I'm just giving a rough example, okay? 20% of, then you execute it. Then at some point you're gonna come back to this point again. Then it can move up. So this is generally a Dunning-Kruger's curve. Like the less you know, the more confident you are. The less you know, the more confident you are. The more you know, the less confident you are. So it works like this. So if you learn something new, accept that you are going to be stupid. Okay, accept it and do it voluntarily. Just keep this in mind, Kiar. Keep this in. I have this on my. I have a board right beside my trading desk that is written, don't be afraid to make a mistake. Just keep in mind that don't make the same mistake again. Make new mistakes every day. So it's like it's written right beside me. So I look at it. It's ingrained in my mind. Okay, if I am I was now visualizing auras in chess. so it, it's like anything. If you start, the Dunning-Kruger effect will go on. So do not be afraid to make a mistake. Okay, if you are afraid to make a mistake, you will never grow. Okay, this is what Osho told me. If you know who he is, he does not told me personally, but I listened to him saying it. Okay, so do not be afraid to make a mistake. Just keep in mind that do not make the same mistake again. Make new mistakes every day. It's amazing. Then I realized the mistake was not like simple. Yeah, yeah. Okay, so this is really a simple strategy. Simple strategy. Think in terms of percentages. If I'm using a fib, for example, think in terms of percent. I was explaining you earlier when I streamed earlier. Like, if you are using of any other standard deviations, generally speaking, you have the 100%, you have 0%, you have 50%. Everything within this, okay, you're not taking precise measurements. Okay, for example, this is the 0%, this is the 100%, this is the 50%. If does it makes a real difference that we are at 61.8 or 32 point? No, it does not makes a fucking difference. Only thing matters is 100%, 0%, 50%. If we are above, we are above 50%. If we are below, we are below 50%. So people who get stuck in like particular details, they'll get lost. So simple things. Think in terms of percentage. We are 50%. Okay, I'm just explaining you things that you are thinking in terms of GAN. That no. Keep it simple, bro. Okay. Who else is watching the stream? I don't know. People are coming and going. People are coming, and I don't think who is anyone who is consistent. Anyone who is watching the stream from the start. And I think no. I don't expect anyone to understand what I'm saying. So it's okay. People concentration is low. I know. Until unless I'm doing some sort of a stunt. Yeah, I have learned this thing. Marketing is completely different to a skill or a product. This may seem obvious, but to integrate some information, it's completely different. I have integrated like marketing is completely different. The majority of the people who are successful in this business, or generally YouTubers or any other thing, they are very good marketers. Hence, they are successful. Okay, I follow a lot of old traders, people who have 2000 subscribers, 100 subscribers, and 200 subscribers. They've been uploading trading content for about 10 or more years. People don't listen to them, but I do, because I know because look at my subs, right? And my skill. It's completely disconnected. So I've learned, because I've been streaming for about a year and a half now. So I've learned that people do not care about the skill. People just look at the marketing. Good marketing should be a chick or two boobs would be good for marketing. Bro, you are seven, bro. I posted your lie about your life today. I don't care about the numbers and sense about sense the aura. The word you're using, aura, it has a completely different meaning to it until it get memed. So think about it. I know, I understand how you felt. So this is how you were born. Not everyone is seven, right? Okay. Do you have any questions? I think this is enough for today. Yeah. Yeah, Wayne is doing this to a point that he shameless, completely shameless. Wayne is doing it for very, very long time. A lot of people who are new has some sort of amount of shame, right, to them when they pitch a plug or anything. But Wayne is completely shameless. He may be uh, smart guy in his own way, in his own setting, like gathering or his own friends group, but uh, he is a good salesman. I tell you that. He's not a good marketer. He's a really good salesman. Really good. He's not a great marketer. And not a great trader. I myself, because I'm a seven, I do not like to, I'm not money motivated. I don't think you are too. I do these things. I learned trading because I had to, right? Literally had to. So my what is my thing here? I am good at trading, not good at marketing, and not good at sales. That's why I'm good at. That is the reason I'm good at my skill or trading, right? So, but I'm thinking about getting good at marketing. It's really good. All I was laughing was he didn't set his website correctly. Yes, exactly, right? So, yes, so you were looking for backtesting, and I exactly tell you to backtest. Like, hey, wizard, is this, what is your date of birth? Is it 1998? Because you said you're 26. If it is, then brace yourself. It's amazing how you find 1997. Okay. So it's going to be your sixth year, right? 25 would be your sixth year. Okay, so you were looking for backtesting, and I was the guy to exactly tell you that the first time to backtest. Like, so I can see because my whole life has like been like this. There was never a point then I never asked anyone for help any time, and like one or two time I may remember now, but majority or I never ask for anybody's help. I think about if I want to learn something, I just think about it and think about, and it comes to me for some reason. Like I find it and I think about it and it comes to me in terms of knowledge. In terms of knowledge. So there was never a question that was left unanswered. It's fucking amazing. Like I thought, yeah, maybe it's just me, but I think it has more to do with seven now that you are telling me this because I've never met a seven in my whole life. So I'm just going back and forth with you just out of curiosity. Because at the end of the day, this is how I take data and like verify, validation, validation, right? So that's nice. 19th. I will go to Twitter. I'm in a space. They're teaching about that. Sure, brother. Okay. Go to Twitter. I'm in a space. Exactly, yeah. So I was saying that it's your fifth, or what is the cycle if you use sixth minus seventh next year? It's going to be tough. Okay, bro. It's 2:49. गोल्ड हो गया हमारा इंडेक्स हो गया. Okay, brothers and sisters, the fact that I got a hey, the same thing happened to me. There was once I was working somewhere. I was working somewhere in a remote place. I was managing some resorts, right? So so what happened at that point, KR? It was my birthday. I did not mention it to anyone, not the people who were working for me, not the waiters, not the other guy who was like, not even my family, right? Not even my girlfriend. No, I did not tell that it was my birthday. And a random guest came. Like you cannot even imagine. It was my birthday, like 2 years ago. A random guest in my resort came. He handed me a cake. And I was fucking blown away by that. I did not eat the cake, but it really shocked me. I like, nice. Okay, bro. So the shit is real, bro. If you know what I mean, shit is real. I am in this world, but not of it. I think this is a closing good line for the close.